Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody, guys. Today we, as usual, will take a look at the gold market. Well, shortly speaking, we think that the gold market stands at the edge of something really big, and probably we will get the first signs of it within a couple of weeks. The most interesting right now is long-term analysis. I mean the view that we have on the monthly chart and the weekly chart. So you could read our weekly research and to see what really is going on here. Because on the monthly chart, guys, it's market really shows some signs that point on the huge bullish reversal pattern. So this is mostly agrees with our expectation that we every time we talk that we have the long-term view, bullish long-term view on the gold market, but it doesn't mean that this bullish view couldn't be interrupted by some retracements. Also, the value of this pattern, the importance of this pattern stands with the targets, the points that it specified. Particularly speaking, following this pattern, the retracement down that could start should reach an area around 1170, 1160 area. This is the first conclusion that we have made from the today view on the monthly chart. Second important moment that we could make on the current situation on the gold is coming from the weekly chart. On the weekly chart, guys, market stands at the overbought and 1618 target of the most recent retracement. Again, here we have some hints on the possible hand shoulders pattern, because 1618 is very typical for the hand shoulders pattern. Also, guys, 1380 area is the major all-time 3-8 fib resistance on the monthly chart. Market stands very close to it. So that's what's concerning the longer term analysis. So taking into consideration the information that we have on the Commitment of Traders report, unfortunately, guys, we can't make the conclusion based on the current CFTC data, because the report usually is released on Wednesday, while the major activity we have got on Friday. So we could make some changes. We can see some changes on the next report. This will come on the next week. It's very interesting to see what really has changed there in the positions of the speculators' positions and traders' positions. Recent report shows just that as the open interest as the speculative net long position stands at the same points, so that they are at the extreme top. Right now, nothing really has changed there. Well, speaking on the short-term situation, first of all, we could make a very important conclusion. That's not time to go long right now, because we're at the overbought on the weekly chart, at the monthly fib resistance, and also at the target that market has completed on the monthly chart. So it means that currently, at least by the Jordan-Apley framework, the upside direction is closed for us. So we will not try to take the long position on the coming week. What we have on the daily chart? On the daily chart, guys, unfortunately, we do not have really much information. The only two probably moments we could discuss here. First of all, take a look. This one Thursday we have talked about this high wave pattern, some kind of spinning top or something of that sort. And take a look. Despite the volatility that has happened on Friday, market returned right back up and closed inside the body of this candle. So market still stands on decision. It's important. From the one point of view, you could treat it as the bullish action, because even the very positive non-farm payrolls release wasn't able to trigger the downward action on the gold market. But from another point of view, here you could recognize the hanging man bearish reversal pattern. It's long shadow to the downside, close the small body. This is some kind of the hanging man. It's usually treated as the bearish reversal pattern. That's in fact all, guys, that we could get right now and could discuss on the daily chart. As you can see, not much information here. For us, the still very important is the range of this candle, because as soon as market will return down and will return right back down inside of the range of this candle, this will confirm the failure quality of the upward breakout. And if this will happen, this will be a very important sign and the first break in the possible wall of downward short-term reversal. Well, relatively short-term. It probably could last for some weeks. It's possible retracement down, but I call it as the short-term, mostly from the perspective of the monthly chart, in the monthly bullish pattern that is forming there. On the daily chart, this will not be, of course, the short-term, but anyway, this will be the first break in the possible wall of the downward reversal. And if markets will start to move deeper and deeper inside of the range of this candle, this will lead to the more and more closing of the long positions by the investors, trigger maybe some stop selling. So this is a very important moment. So that's what we'll be watching for in the nearest couple of weeks, maybe on the next week. This will already happen. So this is one of our most important signals. On the daily chart, guys, we do not have any more, as you can see. There's nothing really to discuss here. On the hourly chart, it's a bit mixed results. So from the one point of view, we have got recall we have discussed this double repo sell pattern, and this pattern has been completed, and even more, that it's even double the target by this drop here. But anyway, even the minor target on the quiet market has been completed. So that's what the 50% support somewhere in this area of this thrust up. It's double repo minimum target, and it has been completed. So we have got the double repo completion, but we haven't got yet the final result with this hand and shoulders pattern that we have discussed. The shape still is possible, so the hand and shoulders could be formed, but for that purpose we need to see that market start dropping right from this top, because moving above this will destroy the shape of this pattern. So we need to see the dropping action right in the beginning of the next week. Also, guys, I have marked this range of the non-farm payrolls release because market has formed another high wave pattern that we will be looking for. It's better to see on the 4-hour time frame chart. Here you could see it looks better. It's just clear that this is one candle. Here has been formed. Market right now stands inside the range of this pattern. It's again will be important in what direction market will taken out of this top. If market will taken out the high price of this candle, this will postpone any patterns that could be formed and any bearish patterns that could be formed. If market finally will start move down, will confirm our idea with this head and shoulders and start dropping. This will be very important move for us, because this could become, as I said, first sign that market is really reversal down, stands on reversal down, and starting retracement down. And we will use this as soon as we will get the confirmation. We will probably start to watch in the downward direction. So we will start to watch the chances for possible taking the short position. But for that purpose, we need really to be sure that this action already has started. Currently, it's a bit not quite so. So we need to wait a bit. So that's been said, currently we definitely could say that we should not take any long position here, at least on the daily chart, since market status the overbought situation. All that we could do is just wait and see the confirmation on the next week, what will happen on the forward time frame chart. Maybe some kind of the scalp intraday chart bearish trades could be done on the 30-minute chart or the 50-minute chart. If you will find something to trade, probably it could be done. But for us, guys, as we mostly are watching on the daily chart, on the 4-hour time frame chart, for us is major task is to get first moving below this line, drop again and inside the body of this candle. It's very important. And second, it is preferable if we will get this reversal down and dropping by some clear reversal pattern, for example, hand and shoulders. But as I said, again, we will get it only if market will start dropping some immediately on Monday, right from here to the downside. Just confirm this pattern. So that's what we'll be watching for in the next week.